But how about some ongoing ownership costs? The set and forget trap.
Yes, this is the set and forget trap. This is a silent killer of cash flow.
Property management?
Yes. So property management fees usually are around 6 to 9% of weekly rent, state and competition dependent. So management fees are usually 6 to 9% of weekly rent, depending on which state you are buying and the competitiveness of the rental market as well. Letting fees, property managers usually charge about 1 to 2 weeks rent, plus marketing costs, as well as photos costs as well. Lease renewals, inspection, and statement fees. This is the small line items that add up, but generally ask these from your property manager and they can explain exactly what they charge for these.
What about rates, water, and strata?
Look, every council is different. Some are more expensive than the others. However, council rates normally come quarterly, water service charges, and usage. Usually the tenant will pay for this. However, the landlord has to pay for service. Strata or body corporate, this is an administrative and sinking fund, and you need to understand upcoming capital works to avoid big special levies.
Maintenance and capex.
Yes, this is another one. So as a rule of thumb, a 5 to 7% of gross rent is pretty enough and set aside for this maintenance, as well as about 1,800 to about 2,500 per annum baseline for a standalone house. Older dwellings might even cost more. Allow for hot water systems, appliances, roof and gutter issues. Big ticket items have life cycles. So you want to make sure that if it's an older home, it might give you these issues compared to a newer home.
And I've heard quite a bit about land tax, which is state-based.
It is state-based. It kicks in once your combined taxable land value exceeds thresholds depending on which state.